This video is for anyone who has student loans, plans on getting student loans, or who just wants to understand their credit score better. I'm the credit queen and I'm going to make this super simple for y'all so you can understand how to get your credit score in the best possible position so you can do whatever it is that you want to do and achieve whatever it is that you want to achieve. So we're talking about how student loans affect your credit score. And before we can understand how student loans affect your credit score, we need to understand the factors that contribute to the credit score. Here are the 6 factors right here from Credit Karma. We have credit utilization, payment history, derogatory marks, hard inquiries, age of credit history, and total number of accounts. So first we have credit utilization, and credit utilization is the percentage of your credit lines that you are currently using. This is important to your credit score and affects your credit score because credit lines are credit accounts that you have available to borrow from at any given time. So if you're using a high percentage of your credit lines, then you look high risk, which means you look like you can't afford to take on any more debt. Fortunately, student loans do not affect this category because they are not credit lines, they're installment loans. You can't borrow from them freely like a credit card, and once you pay them off, the account gets closed. Second is total accounts. It's self-explanatory. Total accounts is simply the total amount of credit accounts that you have on your credit report. This factor affects your credit score because the more credit accounts that you have on your credit report that you're managing effectively, the more responsible you look with credit. So simply having student loans could positively impact this factor, because it's just another loan that you will be managing in your portfolio. The third factor is age of credit history. And what this is simply an average of all the ages of the accounts that you have on your credit report. The longer the credit age, the better, because it looks like you've been managing credit for some time and you have experience. Student loans can affect your age of credit history, but of course you don't want to have student loans for too long anyhow, because the longer you have them, the more interest you're going to pay. The fourth is hard inquiries, and hard inquiries occur when you apply for a new line of credit and the lender pulls your credit report from the credit bureaus. Having a lot of hard inquiries in a short period of time can potentially make your credit score lower, because if you're applying for a bunch of credit, and especially if you're not getting approved for those lines of credit, then you look like you're not in the financial position to get the loans that you're applying for. Therefore, it looks like you're desperate to get lines of credit that you don't qualify for, and you potentially could be a high risk to lenders. So you get a hard inquiry when you first apply for a student loan, but after a few months, the effect or the ding on your credit score will go away. So student loans don't affect this category that much. Fifth are derogatory marks. And derogatory marks are usually serious delinquencies or missed payments that have been reported to your credit report. Then 6 is missed payment. These last 2 are linked and they both affect your credit score a lot. That's why they're labeled high impact. If you have missed payments and derogatory marks on your credit report, then of course you look untrustworthy to lenders. For example, if your cousin Brittany calls you and asks you to borrow $500 and you know for a fact that she does not pay people back, are you going to lend her the money? And if you did lend it to her and she didn't pay you back, then whose fault is that? So simply having student loans on your credit report does not negatively affect your derogatory marks or your missed payments, unless you mismanage those student loans and you miss payments or don't make the payments that you agreed to make. You can avoid missing payments by, if you're still in school, you can notify your student loan distributor and let them know that you're still in school, so you shouldn't have to make payments at the time. Or if you're not in school anymore or you've graduated, but you're not making that much money, then you can request to be put on an income-driven repayment plan. And that way you'll have a payment that's fit with your income. Tip: you definitely have to do this before you apply for a mortgage or any large loan like that, because having too much student loan debt will kill your chances of being approved. It will lower your monthly payments for your student loans, and it will increase your chances of being approved for the loan because you'll have a lower debt to income ratio. All right, so I hope this was helpful to you guys. I know this was quick, but thank you so much for watching, and please like, comment, and subscribe. I love you all, and I'll talk to you later.